a partner and the chairman of the corporate department at Abrams Fensterman, one of Long Island's leading full-service law firms. FEI has over 13,000 members and is devoted to helping CFOs, controllers, and other financial executives in all capacities. FEI provides many benefits to its members, including hosting world-class conferences and events, primarily twice a year, once at its annual summit and once at its conference on public reporting, which will be taking place usually in November. The summit is usually at a really cool place like Las Vegas or Phoenix, and so we always encourage everyone to attend if you can. It's usually a lot of fun. In addition to those events, FEI influences policy at the highest levels, such as at the SEC, the PCAOB, and FASB. FEI has many technical committees which function at the highest levels, influencing legislation and regulation that applies to all of us. For members, FEI provides electronically available research on emerging and current trends. So if you're stuck with some issue, and even if it's the middle of the night, you can access the website and pull down white papers and get guidance. There are message boards and formats for submitting questions that get answered by the staff, which can be a very, very valuable resource to our members. FEI provides online education, including for CPE credits, which reminds me, there are CPE credits available for attending today's event. For any of you who want or need CPE credits, please sign up in the back with Debbie and Amanda, and you might as well get them. You're here, it doesn't cost you any more. FEI publishes its award-winning Financial Executive magazine in both paper and electronic format, provides a career center, resume bank, and job center for all levels of financial executives. Many job openings come through our chapter as well, and we try to help our members that are in transition find positions, and help our members that are seeking to fill positions find qualified candidates, of which we have many in the chapter. So we serve as a clearinghouse for many financial executive positions. And as a quasi-trade association, FEI also provides discounts on things like cars, hotels. There's a lot of benefits of membership. Those are primarily the ones at the national level. At the local level, we do primarily two things. We host these types of monthly events, sometimes in the morning, sometimes in the evening. Our next event will be Wednesday, October 24th. It'll be here again at the King Cullen headquarters in Bethpage. Our topic is going to be one that we have found to be of interest to many of our members who have been considering how to handle their payroll and HR and health insurance functions. With the growth of PEOs in the industry, they've oftentimes gotten a big sales push to go that way, and so we're going to have a panel discussion weighing, should you go the PEO route, or should you keep things like HR, insurance, and payroll in-house? So we're very much looking forward to that. That'll be Wednesday, October 24th in the morning, again here at King Cullen. In addition to these events, we also run confidential CFO roundtables on this, usually the second Tuesday of each month. It varies a little bit, but we'll have all the dates posted on our website. Our members and prospective members meet and discuss on a confidential basis the issues that are important to them that they're facing and help each other solve those issues. Our next CFO roundtable will be October 16th. After that, it'll be November 20th and December 18th. Those are open to all of our members, and prospective members are allowed to attend once or twice before they decide to join up. Those roundtables usually are held at my office in Lake Success, although we may move those around a little bit as well geographically. In addition, we also have begun participating in a CFO roundtable that is exclusively for the CFOs of public companies, which has traditionally been hosted by BDO, which is a new sponsor of our chapter. John Kirakides is here this morning with us for BDO. We want to welcome BDO as a new sponsor of our chapter. And so on October 9th and November 7th, again, and then again December 10th and monthly thereafter, our chapter, together with BDO, will be hosting another CFO roundtable devoted to public companies. Those roundtables are held at BDO's building, the Spire building in Melville. So at this point, I want to thank all of our sponsors. Again, welcome, a big welcome to BDO as a new sponsor. Also, a big welcome to Robert Half as a new sponsor. So let's give a hand to both of us. In addition, our other sponsors include the List Group. Ira Raceman and A.L. Isaac are here this morning from the List Group, IT consulting firm. Eisner Amper and my firm, and Rach Andy Malter and Company are the other sponsors of our chapter. So thanks to all of our sponsors who make all of this possible. And a special thanks to King Cullen for hosting us again. Jim Flynn, great director. At this point, we're going to commence our festivities this morning. It's going to be a real treat. What we're going to do first is hear a little bit from our friend Sam Antar about his history with Crazy Eddie and accounting fraud and scandals and how to do it and maybe how not to do it, I don't know. How to do it, how to maybe not get caught or get caught. And then after Sam tells us his story, he'll join a panel discussion with Michael Brown and Dan Venturcelli about accounting fraud and how to sniff it out, and that should be an interesting discussion. So at this point, let me introduce Sam Antar, the former CFO of Crazy Eddie, and I know we're all looking forward to this.
Thank you for having me. Anybody ever seen the movie Back to School with Rodney Dangerfield? Let's start off with that.
We've got a lot to cover, and time is short. There are two kinds of people in business today, the quick and the dead. So rather than waste your time this semester with a lot of useless theories, we're going to jump right in with both feet and create a fictional company from the ground up. We'll construct our physical plant, we'll set up an efficient administrative and executive structure, then we'll manufacture our product and market it. I think you'll find it very interesting and a lot of fun. So let's start by looking at construction costs of our new factory. What's the product? That is immaterial for the purposes of our discussion here, but if it makes you happy, let's say we're making tape recorders. Tape recorders? Are you kidding? The chaps will kill us on a labor course. Okay, fine. Then let's just say they're widgets. What's a widget? It's a fictional product. It doesn't matter. Doesn't matter. Tell her to the bank.
Take it easy, first.
On the board, you will see a cost analysis for construction of a 30,000 square foot facility, which will encompass both factory and office space, and is fully serviced by all utilities, a railroad spur line, and a 4-bay shipping dock. Hold on, why build? You're better off leasing at $1.25, $1.50 a square foot. Take your down payment, put it into CDs, or something else you can roll over every couple of months. Thank you, Mr. Mellon. But we'll be concentrating on finance a little later in the term. For the time being, let's just concentrate on the construction figures, shall we? You will see the final bottom line requires the factoring in of not just the material and construction costs, but also the architect's fees and the cost of land servicing. Oh, you left out a bunch of stuff. Oh, really? Like what, for instance? Well, first of all, you're going to have to grease local politicians for the sudden zoning problems that always come up. That is the kickback to the carpenters. And if you plan on using any cement in this building, I'm sure the teams would like to have a little chat with you. And I'll cost you. Oh, and don't forget a little something for the building inspectors. Then there's a long-term cost, such as waste disposal. I don't know if you are familiar with who runs that business, but I assure you it's not the Boy Scouts. That'll be quite enough, Mr. Mellon. Maybe bribes and kickbacks and mafia payoffs are how you do business. But they are not part of the legitimate business world. And they're certainly not part of anything I'm teaching in this class. Do I make myself clear? Sorry, just trying to help. Now, notwithstanding Mr. Mellon's input, the next question for us is where to build our factory. How about fantasy land?
Well, the reason that I brought that video there is that we don't teach enough about crime. We don't teach enough about white-collar crime. We teach people how to succeed. We don't teach people how they could fail. We don't teach people how they could be screwed by people like me, which is why I'm here. So let me give you a little bit insight into my mind as a criminal. There are basic rules that we abide by. There are 3 basic rules. The first rule is we consider your humanity, your morality, your ethics, your good nature, your sense of fair play as weaknesses to be exploited in the execution of our crimes. The morality that you abide by, the ethics that you live by, your good intentions, they limit your behavior because you're abiding by a certain moral or ethical code. But it doesn't limit my behavior as a criminal because I have no morals, I have no ethics. So the more God-fearing that you are, the more decent you are as human beings, the easier it is for the criminal to scam you. Because we're not constrained by your sense of decency. The second rule of the white-collar criminal is we measure our effectiveness by the comfort level of our victims. The more comfortable you are with us, the less likely you're going to think we're lying to you. You know, there's an old saying among criminals, you steal more with a smile than you can with a gun. And you can't lie to somebody until they like you. So you have to be likable, you have to be a good communicator, you have to be personable, you have to be a schmoozer. If you can't be any of those, how can you get anybody to like you and then get them to believe your lies thereafter? It's not going to work. Let me give it to you this way. How many single people in this room? Nobody single here? One. How many people were single? How many people dated? How many men tried to pick up girls? How many girls got picked up by guys? Okay, understand white-collar crime. Picture the dating scene, a guy hitting on a female. Doesn't the guy basically tell the girl anything he needs to say to get to first base? What is he doing? He's increasing her comfort level. She's not going to go with a creepy guy, right? She ain't going to go to first base with a creepy guy. She wants to feel comfortable. She wants to get a sense of comfort level. The difference between a white-collar criminal and a guy trying to pick up a girl at a bar is the guy at the bar is trying to get into the girl's pants. I'm just trying to get into her pocketbook. That's white-collar crime. White-collar criminals measure their effectiveness by the comfort level of their victims. The third basic rule is we build walls of false integrity around ourselves to increase the comfort level of victims. Ken Lay from Enron, he gave money to charitable causes. Same thing like Bernie Madoff. Even me. Who knows, maybe I have a wall of false integrity today. I teach the FBI, the Securities and Exchange Commission. I even teach at Stanford Law School. Is that a top law school? Business school? All right. Been on CNBC, ABC, all the 3-letter government agencies and networks. So does that make me into a reformed criminal? Does that make me redeemed? The answer is no. You never know. So white-collar criminals build walls of false integrity around themselves to increase the comfort level of their victims. Anybody remember the Crazy Eddie commercials?
July is not Thanksgiving, it's not even Christmas, it's better than all those. It's Crazy Eddie Day. You'll save money like never before during Crazy Eddie's Crazy Eddie Day sale with the guaranteed lowest prices on anything and everything in home entertainment. Shop around, get the lowest sale prices you can find, then go to Crazy Eddie and he'll beat them. It's Crazy Eddie Day. Save big bucks during Crazy Eddie's Crazy Eddie Day sale. Crazy Eddie, his prices are insane.
You see, we plastered the New York metropolitan area with those commercials over a 20-year period. Crazy Eddie's had more name recognition than Coca-Cola. Everybody loved those commercials, but what were we really doing? We were endearing ourselves to our victims, increasing the comfort level of our intended victims. The truth is that Crazy Eddie's was never a discounter. We were a bait and switch operation. Most of the customers walking into a Crazy Eddie store never walked out with the merchandise they intended to purchase. We had 3 musketeers waiting on every customer, if we had to. The first guy was called the SW guy, switch the customer. Second guy was called the TO guy, take over the sale if the SW guy didn't succeed. The third guy was called the NAD guy. If the SW guy couldn't switch the customer, if the TO guy took over the sale and still couldn't switch the customer, the NAD guy, we called him the nail-at-door guy. 3 people would wait on the customer in an attempt to sway them to buy a more high profitable alternative. Finally, if we had to discount, which was rare, we were stealing the sales taxes because most customers in those days paid cash. You know, the internet companies today, they have a very big price advantage because they don't collect sales tax. Well, in those days, we just stole the sales tax. At 6%, 7%, that gave us a huge cost advantage over our competitors. That's how Crazy Eddie did it. But he became the hero of the New York metropolitan area consumer based on those commercials and also based on that he broke what was known as the fair trade laws. Anybody remember what fair trade was? In those days, in the 1960s, 1970s, electronics companies, manufacturers were allowed to tell retailers how much they could charge on consumer electronics. And everybody had to charge the same price. The problem was that large retailers, chains that had advertising budgets, were putting the smaller retailers out of business because they couldn't compete on price, even though they had better cost efficiencies. Eddie had those fair trade rules overturned. He made them illegal by going to court. So Eddie became the hero of the New York metropolitan area. Eddie became the hero of the New York metropolitan area consumers. And also, he had the advertising which endeared himself to his intended victims. But the whole thing was a fraud. In fact, Crazy Eddie's was set out as a fraud from day one. You see, there were 3 phases to Crazy Eddie's. 2 of the phases was as a private company. From 1969 to 1980, Crazy Eddie's was a private company. Now, if you're a private company, does it pay more to overstate your profits or understate your profits? What? Under, right. The reason why you understate your profits is you pay less taxes. There's no real reason to overstate your income because you're going to pay more taxes, you're not selling stock to the public. And that's what Crazy Eddie's does from 1969 to 1980. Around 1980, we say, we're going to go public. If we're going to understate our profits, that stock price is going to suffer. You see, the economics of crime is like this. You get a bigger bang for the buck, overstating your income and overpaying your taxes as a public company than understating your income and saving on your taxes as a private company. Take $1 million if you understate your income by $1 million. How much in taxes are you going to save? We've got a tax guy here, about $400,000 or so, right? But if I overstate my income by $1 million, I may pay $400,000 in taxes. But if I'm a public company and my stock trades at 30 times net income, that $600,000 in inflated net income, what does that get me in market value? $18 million in inflated market value. So if you overstate your income, you're inflating the market value of the company, and who owns all the stock when a company goes public? The Antons do. So from 1980 to 1984, we start legitimizing Crazy Eddie's. We gradually reduce the skimming. We create the securities fraud by going legitimate. And the gradual reduction of skimming enables us to report higher income every year, even though our income was flat during that 4-year period. Because we gradually reduced our skimming and increased our reported income, whereas our real income was the same. And in 1984, we go public, and then we start overstating our income so we could sell stock at inflated prices to gullible investors. That was pretty much the business plan of Crazy Eddie's. Screw investors, screw insurance companies, screw consumers, screw just about everybody. And as I said, it was all planned from day one. You know, I started out by giving you some of the human elements of fraud. You see, fraud is not about obstruction. If I tell an auditor you can't have a document, that's going to raise a red flag. So the key is to either give him the document very late that he has no time to look at it, or the key is even if he has the document, he has no time to read it. He's distracted from looking at it. Let me give you an example of how the Crazy Eddie fraud was conducted from the human point of view. This was a documentary done on Crazy Eddies.
What do we do? Account sheets show us that X, our inventory is at Y. We have a problem.
His solution is to plant a spy inside the company that audits Crazy Eddie. He sends his cousin Sam to accounting school for an all-expenses-paid education.
That brought great loyalty to Eddie. When Eddie would say jump, I would say how high.
So Sammy went off to college, got an accounting degree, went to work for the CPA firm that actually audited Crazy Eddies, learned how audits were conducted so that he would know where the holes were.
With Sam placed on the inside, Eddie's confidence grows. By 1978, Eddie and his family are skimming $1 for every 5 they bring in, reaping millions.
The skimming was handled now as like just as a division within the company. It became institutionalized within the company.
But Eddie is running out of places to hide his cash.
There's millions in safe deposit boxes in the bedrooms, in the houses. There's millions in the ceilings.
He solves that problem by taking monthly trips to Tel Aviv and depositing his money in numerous secret bank accounts.
I've seen deposit slips of $1 million at a time. I've seen bank balances totaling over $6 million.
As his illegal profits skyrocket, Eddie employs his wife and family as couriers. They transport over $11 million to his Tel Aviv accounts. While they do the dirty work, Eddie dreams of greater glory.
He's looking to be a star, and he's not a star yet. Donald Trump is bigger than him. So, how do you make it? You go public.
He saw taking the company public as his brass ring. You can do much better with phony income in a public company than you can in a private company because other people are buying your stock.
But before Antar can approach Wall Street, his company must first undergo a thorough financial audit. He calls on his spy, Sam, who arranges for an inexperienced auditor to be assigned the job. The naive rookie is greeted at the front of the store. At the back, Antar's staff piles up masses of inventory shipped over from other stores. Antar shows the auditor an example of the merchandise he has come to tally. Then a helpful employee is sent up to count the stacks.
She would call down 70 large screen TVs. And if you looked at that row as the auditor from the ground, you could count 70 boxes. You could see how many there were across and how many there were down.
But the entire stack is little more than a facade. The auditor dutifully records the inflated numbers he is given. Antar goes further when he distracts the auditor and alters his inventory tallies right on the count sheets.
He would take every one and make it a 4 or a 7, and then give them back their altered papers. And so where they had written down 10, it was now either 40 or 70.
Even better, the files give Eddie crucial information about the next stores the auditor plans to visit and the sample counts he intends to take.
So that night, they had these poor guys loading up the truck again and driving to store B. And they just kept a step ahead of the auditors in doing it.
The auditor paints a portrait of a thriving company. Eddie Antar is now ready to strike.
All right, let's dissect what had happened over there. Okay, I started Crazy Eddies when I'm 14 years old. By the time I'm 18 and ready to go to college is almost about the time that the company is starting to mature as a private company and thinking about going public. It's in the late 1970s. The family puts me through college to help them commit more sophisticated crimes in the future. I go to Baruch College, the family pays me as though I'm working full-time, even though I'm a full-time student at Baruch College, right? And I major in accounting. Why? Because we need the numbers man as part of the Antar family on the inside to help us manipulate the auditors. So I major in accounting, I get a 4.0 index in accounting. I never cheated in college because that would have made me to a bad criminal. It wasn't a moral decision. So I get a 4.0 index in accounting, I take the CPA exam. In those days, 80% of the people failed the CPA exam every time it was given. I passed it on the first try with a 91 average, one of the top grades in the country. And then I need 2 years to get my license of experience. Now, in 1979, 1980, around that time, I needed to get work for an external accounting firm to get my license, right? So, at that time, we were audited by a small accounting firm out of Carl Place. The name doesn't matter. There was only 3 audit partners, and we were 35% of their business. So my cousin Eddie goes to one of the audit partners and says, Sammy needs a job in accounting. Can he work for you? You think they're going to say no when you have 35% of their, when you're 35% of their business as a client? No. So I go to work for this small accounting firm. And because the firm was always stretched thin, because Crazy Eddie was such a large client, I invariably end up working on the Crazy Eddie audit. Not by plan, but by practice. Around 1983, the audit firm, that small audit firm out of Long Island, is replaced by a large Big 8 accounting firm. But by that time, I understood accounting inside and out educationally, and I also understood accounting policies and practices. I understood how things were done and how things shouldn't be done. But I had the vantage point. I had the vantage point of it as a criminal. You see, criminals will always profile their victims so they know whether or not they can take advantage of them. Anybody have kids here? Do your kids know when to push the buttons and when not to? Or when to take advantage of you and when not to? Well, guess what? Criminals learn from kids. That's what we do. So you have to learn. We learned about audits, how they were done, and how to study our victims. One of the things that we learned was, well, we knew, in the 1980s, there were no females in auditing. In this room, it's about 30% female. When I go to colleges and universities, it's 70% female. In my day, there were no females in accounting. There were no accounting professors that were female. There were certainly no audit partners that were female. Once in a while, on an audit, they'd spray a few token females. It was a male-dominated profession. Now, take that into account as part one. Part number two is that audits, by their nature, most of the legwork is done by young people out of college. I didn't have to arrange, as that tape said, for an inexperienced auditor to be assigned a job. Over many years, there were many, many young auditors being assigned to the job, and most of them were young males, 24, 25, and 26 years old. They did most of the legwork on audits, talking about profiling your intended victim. So you got young men in their 20s, and most of them are single. Now, remember what I said about fraud being about distraction? It's never about obstruction. It's about creating an alternate form of reality. What is the easiest way to distract a young male in his 20s that's single? Cleavage. Well, that was one of the techniques that we did. Whatever we possibly could, when the auditors would come in, and it wasn't just one young single male, as the tape would make it seem so, that's oversimplified. There were many young single males in many locations over many years. And I can assure you that we weren't caught because anybody climbed over the boxes. They were paying attention elsewhere. Now, fraud is all about fraud is all personal. Fraud is all about interaction between human beings. Documents don't commit crimes, people commit crimes. Now you saw that scene with that young auditor. He doesn't climb over the boxes. He's got that pretty girl looking over him, bending down, showing some of us stuff. Okay, think in this terms. Try to think out of the box for a second. Don't think in terms, well, he failed to look over the box. What was his biggest mistake? Can anybody figure that out? Thinking out of the box. Go ahead, try it. Trusting her, yes, close, but more than that. No, more than that. I'll explain to you what it is. Go ahead, sir.
Leaving the paperwork around.
That's the obvious stuff. I want you to think out of the box for a second. I want you to think like a criminal, for instance. First of all, everybody here is wearing a jacket and tie. Should you be wearing a jacket and tie if you're going to be climbing over boxes or counting inventory? Right. What was he wearing? He was wearing a jacket and a tie. Now, what does that show you about a person that shows up to do, let's call it blue-collar work, with a white-collar suit? What does it show you when somebody's coming to do dirty work with a suit on? Right. Shit doesn't smell, excuse the language. But they said I'm allowed. So if I'm a criminal, remember, we have to profile people over long periods of time. You have to know who to take advantage and who not to. Young male, single, and his shit don't smell. What does it tell you? So we knew he wouldn't climb over the boxes, but more important than that, remember what I said to you that the white-collar criminal considers your humanity as a weakness to be exploited in the execution of our crimes? When a guy wears a suit and his shit doesn't smell, what does it tell you about his personality? Anybody ever see the movie The Devil's Advocate with Al Pacino? You see the movie? What's the devil's favorite sin? It's in the last scene. Vanity is the devil's favorite sin. And don't we all have vanity? Guys, when you try to pick up girls, what do you appeal to? You're beautiful. And vanity. You see, we all have vanity, and we all have a sense of self-esteem. And we feel good when somebody validates our own personal self-esteem. You're smart, you dress well, you're a brilliant accountant. We all feel good when somebody does that. But the criminal praise, like a guy trying to pick up a girl at the bar telling her she's beautiful and she wants to hear that she's beautiful, the criminal preys on your sense of vanity. Remember, you can't be pricks if you're a criminal, at least overtly. You have to be nice, you have to be cunning, you have to be personable, you have to be likable. And that's what we did. That's how we profiled. That's one example about how we profiled our intended victims. Male, single, easily distractible, high sense of self-esteem. We took that all into account in whose boxes would who would we triple accounts on and who we wouldn't triple accounts on. That's the fraud. That's how fraud is committed from the criminal's perspective. Now, there's a big debate going on in the accounting profession. Some of my, well, I'm not a colleague of theirs because I'm no longer a CPA, but some of the CPAs over here would tend to disagree, or may agree. I don't know. Well, they'll wait and see. But one of the things is they want to have auditor rotation. Is it good? Is it bad? I'll reserve judgment on it, but I'll tell you from the point of view of a criminal, auditor rotation is bad for criminals' business because we like consistency. We hate surprises. When there's a new face in there, when there's unpredictability, it gets harder for us to be able to plan our crimes. So from the criminal's point of view, we should not have any auditor rotation whatsoever. Partner rotation within firms, all firms have pretty much the same culture. It really wouldn't make a difference, partner rotation. But auditor rotation would not be a good thing for criminals. It will make our jobs difficult. Will it stop us? No, it will make it more difficult, maybe less crime, but it won't stop crime. Nothing stops crime. Now, talking about audits, you never tell an auditor nothing. I'm sorry, you never tell an auditor they can't have something. You gotta pretty much be able to commit a fraud in plain sight. So how do you do it? If you have to show a document, when do you show it? How do you commit your fraud in plain sight? Well, audits are pretty much structured. It might take 10 weeks to do an audit, and they're planned out accordingly. Over a period of, say, 10 weeks, you gotta get to week number 2, you have to get 20% of your work done and 80% of your work left to do. Week number 5, you're supposed to have 50% of your work done and 50% of your work left to do. Week number 8, you're supposed to have 80% of your work done and 20% of your work left to do. My job was to do the opposite. By week number 8, they were supposed to have 20% of their work done and 80% of their work left to do, rather than 80-20. So algebraically, if you were to do a calculation, in the last 20% of the audit, they would have to do 4 times the amount of work. And it's at that point that I would give them whatever they needed. Again, you never say no, because at that point, in trying to satisfy the client and also trying to satisfy their internal guidelines or deadlines, that's when I would give them the paperwork, when they're least likely to look at it. So if somebody stalls you, there's usually a good reason for it. You know, most taxpayers, even today, I think, file their tax return on the last day, if I'm not mistaken. Well, that's pretty much how we did it. One of the frauds we did was something called an accounts payable fraud, a debit memo fraud. Well, I'll illustrate this point about stalling. You see, in 1986, Crazy Eddie's had an accounting policy called purchase discounts and allowances are recognized when received. In 1987, I changed the policy to purchase discounts and allowances are recognized when earned. What basically I'm saying is in 1986, if I bought 100,000 Sony TVs and Sony gave me a discount, I would not book that discount and increase my profits until I got a credit memo from Sony. That's what we meant by purchase discounts and trade allowances are recognized when received.